Okay, hey bro. So I'm going to be explaining to you mainly the boom and crash strategy, the one that we use, right? So we go to relative strength index, we apply of period one, the levels we apply 90, 50, and 10. Done. We have it like that. Then we go to indicator window one, we choose a moving average, simple, 5 level. Then we choose whatever color you want, then you click done. Wait, mistake right there. Moving average, no, I don't want this, nope, I don't want that one. Moving average, yes, exactly like that. Then we go back and we select the moving average convergence divergence, exactly like this, very simple thing. Then we go to the main charts, Bollinger Band, we put exactly like this. Period 34, deviation 1.619, everything that you see right there. Hit done. Okay. So mainly when we analyzing, I like to go to my indicator window, delete the Bollinger Bands, so I have a clear view of price action, a clear view of the market, so I see exactly what's happening in the market, right? So depends on how you want to trade boom and crash. Isn't do you want it to be a day trade, a scalp trade, or a swing trade? For swing trades, I would advise you to go to the H4 time frame, exactly the H4. And I'm sure you've noticed that I have a couple of sell limits right above there. I'll explain to you as soon as I'm done. If you want to swing trade, I advise you to go from the daily time frame, H4 time frame, H1 time frame. Those are the four the swing trades. If you want to go for a day trade, I advise you M30 time frame. Forgive my Wi-Fi is a bit slow. M30 time frame, M15 time frame. Right. So basically what we're looking for is for recent levels of support turned resistance or levels of support. So we take our line, and as you can see right over here, the markets approached this level, then rejected downwards, rejected. This shows that this level is a very strong level of resistance in the market. So then we wait for the market to come to this level, rejection. By rejection, I mean a red candle. Then we can only enter in the market when a rejection occurs and the candle closes red, like this candle exactly. Wait, let me show you. Like this candle exactly, this one. We can only enter in the market when we have a good candle, a good red closing candle like that one. We do not trade candles like this. We don't take candles like that. We don't take candles like these ones. No, we don't take candles like these ones also. Like these ones, sorry. These ones, we don't take them. We don't take candles like that one. Okay. Then we wait. As you can see, I previously called Crash 500 in the group. Both VIP and free group got the signal. It had approached this level and the market rejected, meaning we should have entered. Then I waited for a good candle to be formed right over here. It first rejected. I didn't enter. I didn't call out the trade when it first rejected. It then rejected again. Then after it rejected again, it had shown to me that it wanted to form evening star pattern. If you can understand that evening star pattern, then I entered, called out the trade, went into good profits, closed in good profits, exactly like that. So What I mean is, when we are trading, right, we mainly look for M formations on Crash 500 and also Crash on King. We look for M formations. M formations. By M formations, I mean these type of formations. These ones. Very beautiful formations. You see, the market came, rejected, went up again, then rejected, and provided us a very, very, very strong, sell in which we can actually capitalize it from the market. And if we can look back, we can see that this level is a very strong level of resistance. It has been tested 1, 2. It has been tested a lot of times, many times. I'm sure you can say it many times. It has been tested. So that is what we mainly do when we use the strategy. We then, using the indicator is very optional. You can choose to use it or you can choose not to use it. It depends on what exactly you like. But then I personally do not use the indicator that much because it lags in price action. I love price action. I love to see clear charts, clear, beautiful charts, and it lags in that. So then I only use it when I know that I want another confirmation in the market, right? So then I apply again my bands. So then this trade from the higher time frame analysis, this one is an overall sell market from the daily time frame. So then basically we know the market direction, right? Then if you can look here on this beautiful move, this so beautiful move, right? You can see right now that the market broke out of the Bollinger Bands, broke out, nice clean breakout. We love that, a nice clean breakout from the Bollinger Bands. Then it went and rejected this level. This level, if you go to the daily time frame, let me show you. If you go to the daily time frame, it's exactly this level, right? It's exactly this level, this one, which is very strong previous level of resistance, meaning that this is a very strong level of resistance and the market is thereby going to crash no matter what, because market makers and deriv likes to produce spikes at previous levels of resistance or previous levels of support, right? Exactly that. Then we go back to our 15-minute time frame, go back where we were. Oh no, let me adjust my arrow, right? Then we go back where we were, right? Okay. So then the market broke out right over here. Let me zoom in. The market broke out of the Bollinger Bands. Then it rejected exactly there. We would have entered our sell position. I don't know how many positions you would like. Maybe 10, 20, depending on your account size, proper risk management. Then as well as you can see on our indicator right over here. Okay, let me put another arrow for you. On the indicator right over there, I think you can clearly see that markets had approached the 90 level. Then it had shown that the market is now officially overbought and it is ready for a sell. That's another confirmation. So 1, we wait for markets to be out of bands. 2, we wait for a rejection. Then if you like the indicators, 3, you can wait for the indicator to show you that no, market is ready for a sell. Or we can use M formations, M or W formations, right? W formations being M formations being exactly these ones, these M's, you can see, right? So then that's basically it. We wait for market to be outside of the bands, show us a good rejection. We look at our indicator. If our indicator is showing us that we should sell, we sell. Then you can choose not to use the indicator. You can choose to also use it, but then it lags in price action. So my advice, if you love price action and if you don't want to miss out on a lot of good moves, for example, this move right here, the indicator wouldn't have told you to sell right over here. We would have told you to wait. So then we don't like that. We like good price action. We like good moves. So then that is where it lags. You can see that beautiful crash down. This one, this whole move that I'm covering right there. This whole move. The markets didn't. The indicator didn't provide us an entry right over there. Then for him, I would advise you to, okay, this one doesn't matter. So then we are now moving on to boom. Okay, boom, very simple, very easy to understand. I will show you how to kill it right there, right now. First of all, remove the Bollinger Bands. Get a clear view of price. Get a clear view of price action. So first and foremost, we can easily see from the beginning of this move that right here, the market was falling in boom this week. It was falling and falling and falling and falling. Then it approached this level and it rejected the price. It rejected this level and market shot up, right? Then later on, the market started to fall. Then it came back and retested this level again, which is previous level of support, turned support again. Then the market beautifully shot up with little. This would have been a sniper trade with little drawdown, massive profits. When I say massive profits, I mean a lot size of 0.20. You could have profited around $50 on this trade, 50 to more on this trade, maybe 60. All right. Then, so that's what we wait for. We go back, we apply our Bollinger Bands. You can clearly see market was outside of the band, previous level of support, 10 support again. Market short up, very beautiful. Then you're also interested in trend lines, right? So then trend lines, we can also use trend lines in boom and crash. We go, take our line, you can see from here to here. From here to here. So trend line is basically something like a horizontal line, but we don't, but, okay. It's exactly like a horizontal line, but we can apply it in a more suitable position than a horizontal line, right? So then, yeah, we can see that the market loved this area. It loved it. This is, by the way, called a flag pattern. This is a flag pattern, mainly a bullish flag pattern. We love this when trading boom and crash. These we use to just add positions when we're trading. We add another position, right? So we can see that the market had been shooting up. Let me show you. The market had been shooting up from here, shoot up. Then it came here, retraced, then it went into this channel, this beautiful channel flag pattern, right? So it went into that channel. Then it was being turned. Resistance here. Let me zoom in. It was being turned resistance here. Resistance, support. So then we wait for a breakout. Breakout meaning the market would break this channel, break this flag, break this trend line, then come back and retest. If it comes back and retests like this, retests the trend line, it shoots up. You understand me? Exactly that. It's very simple, very easy to understand. Then we wait for a break, retest, then we enter our buys, then market, boom, shot up. No matter what, it always shoots up. Then we can also use these flag patterns. For example, in a selling, if the market is actually selling, right? Excuse me. If we go here, we can easily see that the markets, right, had been respecting this level. It formed what is called a descending triangle. So then the market was consolidating in this little, let me take another arrow. It was consolidating in this little channel, consolidating. Then it broke out, then it came back and sort of retested our trend line. Then we should have entered a sell position right there, then write it down. Simple, beautiful. I'm sure you have a PDF on that one, and I'm sure you properly understand it, right? Okay. So then that's mostly what we use. We use flag patterns like that one. We also use support and resistance. Wait for market to be outside of bands. Wait for a rejection. Good green candle. Good red candle, like I showed you in the beginning of the video. Then what else do I need to show you? Yeah, I guess that's mostly it. Then for currencies, for currencies, what happens is we begin on the weekly time frame. Don't mind, just listen to what I'm saying. Don't mind what I'm showing. This doesn't matter. We begin on the weekly time frame. We see the market direction. We see that if is our market selling or is it buying from a weekly time frame. Then we look for previous levels of support, trend resistance, everything like that. Then we go from the weekly, we go to the daily. We look for the same thing. Is our market buying or is it selling? We look for trend lines. We look for levels of support, trend resistance. We look for exactly what is the market doing, so we understand what's happening in the market. Then we go to the M15 time frame. We look for our entry. Then boom, we enter. When we either see a W formation, M formation, or a previous level of resistance, trend support, all that good stuff, everything like that. So then that's basically the strategies. That's basically everything you need to know. That's basically everything you need to understand to master boom and crash. You need to know to understand it. And I'm 100% sure, no matter what, you're going to understand the strategy and you're going to master it. As you can see also on our indicator channel, here, boom. What did the market do? The market was now oversold, reached the 10 level, then another confirmation to enter, then boom, the market bought. Then here is a level of adding more positions to your buys, to your sells. Then the last thing you need to know, we take our bands, we apply them. If you take a trade in the 15-minute time frame, if you do analysis in the 15-minute time frame, mostly this is going to be your entry right here. We have put the arrow. This is going to be your entry. Your take profit is exactly here. Your take profit is exactly here. You wait for the market to come out of the bands, then you take your profit. That's if you did your analysis on the 15-minute time frame. If you did your analysis on the H1, you wait for it in the H1. If you did your analysis in the H4, you wait for it to come out of the bands in the H4. Then you enter, then you buy, then you take your profits and leave. That's basically the strategy. I hope you understand, and I hope you master boom and crash. Thank you, and yeah.